that let success soar high. I will achieve, I will fly high. In SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
In this year's budget, Finance Minister Nirmala Sitharaman announced the setting up of digital banking units. The payment infrastructure in the country has already evolved, but this was seen as a move to lift other facets of banking. Such disruptions are taking place across the banking, insurance, and financial sector. Good morning, my name is Ishan Gera, and you're watching the Business Standard Banking Show. We start the episode by highlighting the banking developments of the week. We also have an interview with Citibank CEO Ashu Khullar lined up for you, and then there will be a quick chat with McKinsey and Company senior partner Joydeep Sengupta. In our Banking for You section today, our experts will explain how HDFC Bank's 30-minute car loan service works. Here's a look at the banking developments of the week. In a surprise move, RBI Governor Shaktikanta Das announced on May 4th the Monetary Policy Committee's decision to increase the repo rate by 40 basis points to 4.4%. This was the first increase in 2 years. In May 2020, RBI had reduced rates by 40 basis points. Confronted by elevated inflation pressures that have shifted the future trajectory of inflation upwards, we have announced our intention to engage in withdrawal of accommodation to ensure that inflation remains aligned to the target, the governor said. The reversal of rates sent the markets into a free fall. It remains to be seen how aggressive RBI would be going forward as the US and other developed economies resort to more hikes. Talking about markets, India's biggest IPO of LIC witnessed 63% subscription on the first day. Life Insurance Corporation opened its offer for sale to the public and policyholders on May 4th, and the subscription will continue till May 9th. The company will be listed on the exchanges on May 17th. It is expecting to raise 21,000 crore rupees. In its red herring prospectus, LIC had said that industrial unrest, slowdowns, and increased wage costs could adversely affect its business operations. In its anchor book announced on Monday, for 5,627 crore rupees was fully subscribed, with domestic mutual funds taking 70% of the portion. The IPO will set the course for dilution of government stake in public sector companies. If it is successful, we might see more PSUs being put on the block. A failure, on the other hand, could hit the devolution targets. From insurance, let's move on to lending. The Reserve Bank of India, in its master circular released a few days ago, hinted at the possibility of allowing non-banking financial companies, even the non-deposit taking ones, to issue credit cards. NBFCs would have to take an approval from the regulator and maintain a minimum net owned fund of 100 crore rupees. While credit card transactions haven't kept pace with debit cards or UPI transactions, a business standard analysis had earlier found that the average ticket size of such transactions had grown faster. An average credit card consumer spends 2 to 3 times more than a debit card user. Also, more companies in the business will benefit consumers as they would offer better services and more discounts to lure them away from traditional users. While the central bank is allowing NBFCs to expand their scope, India Post Payments Bank is also gearing up for expansion. IPPB was the biggest player to get a payments bank license. It started operations in September 2018 and had plans to convert into a small finance bank in 2019. While that may still be far, IPPB last week got the cabinet approval for a 820 crore rupee capital infusion. Minister of State for Finance Anurag Thakur said that the fund infusion would help IPPB expand to all 156,000 branches. Since its launch, IPPB has opened 52.5 million bank accounts through its network of 136,000 branches and 189,000 postmen. Moreover, 77% of the accounts opened have been in rural areas. From India's newest banking entity, let's move on to one of the oldest foreign banks, which bid a partial goodbye to India in March by selling its retail business to Axis Bank. Business Standard's Raghu Mohan spoke to Citi India's CEO Ashu Khullar on the road ahead for the company.
Mr. Khullar, welcome to the BS Banking Show. Good to have you on our show.
Yeah, no, hi Raghu.
Yeah. My first question is that, unlike any other bank, Citibank has been a pioneer in retail banking. Now, for you to say, and that too for a bank which has been around for nearly 100 plus years, that you're exiting retail was a big surprise to the market. Can you just take us to the strategic thinking behind this decision?
So Raghu, I think this is something which has been covered earlier as well. But I think, as you know, Jane Fraser, who was a new CEO and took charge around a year back, she did a full review, of the strategy in a cold, kind of a fresh start. And one of the decisions made, which I must say in India emotionally is a difficult decision because, as you said, we kind of pioneered and innovated a lot of what modern consumer banking and retail banking came to be in India. So it was clearly emotionally a very difficult decision. But the strategic thinking was the following, that as a global bank, I think our globality and our expertise and value to our clients plays best to the institutions which value globality. And these are typically corporations as well as investors. Consumer business over the years has become largely dominated by local domestic players, not only in India, but globally. If you see around various markets, at best you'll have some regional players. So it was a question of where do we deploy your limited capital. Everybody's capital is limited, and you want to try and be in businesses which you believe have a long-term, sustainable, competitive advantage. And for us, the institutional businesses are the ones, because of the globality element, which I told you. So I think it was not a decision specific to India, as you know. This is something which we have done in 14 markets, including India. So this was not India specific. It was a strategic decision. Of course, what we are keeping is our focus around the US market, as well as a wealth management around the hubs, the global hubs around the world.
Am I to take from this, think global and act global is not a workable model anymore for foreign banks?
Yeah, so I don't want to comment on other foreign banks, Raghu, but what I'm saying is, I think in the institutional business, when you bank with companies, financial institutions, investors, I think globality plays wonderfully well. And I'll actually get into it when we talk about our strategy, right, which we're going to do. What I was saying is, in the consumer banking, it's increasingly becoming a field dominated by domestic banks, not only in India, but globally. Now, if you look at our institutional businesses, which, by the way, was the majority of our sales, and in fact, even a higher percentage of our profitability and margins, there the globality works beautifully. And I think what I'm excited about is it fits in very neatly with the Indian government strategy and the Indian growth potential. And what I mean by that is the following. India, for its growth aspirations, needs foreign capital because our domestic savings are not enough. We need foreign capital. The foreign capital can come in two ways. Either it comes in as foreign direct investment, which is companies coming in investing in India. And I think the government has been hugely focused on it through the various production-linked incentive schemes. And if you look at that segment, which is the multinational segment in India, we have around a 30% market share. We are by far the largest player in that market. And in fact, not only are we large, I think we see tremendous growth opportunity because of supply chain diversification, China plus one strategy, jointly with the government focus, right? The second element is the foreign institutional flows or the foreign portfolio institutional investors, right? Whether it's real money accounts, sovereign wealth funds, infrastructure funds, all kind of investors, right? Again, if you look at that segment, Citi has a dominant share, whether you look at custody businesses where we are 26, 27% of the market business. If you look at a corporate FX business or equity platform. So globality actually plays very, very well in the institutional business. Similarly, a lot of Indian companies are looking at growth not only in India, but globally. So we take foreign companies into India and we take Indian companies through our network, both using a global network.
Now, in your new avatar, you're basically competing with three banks which answer to your new profile, which is Bank of America, Deutsche Bank, and JP Morgan, and the whole two full services universal banks, which is HSBC and Standard Chartered. They're corporate banks. Now, what will be the differentiator when in your institutional and wholesale business compared to those banks? Beyond the point, does this business not get commoditized in any way? Because they too can claim to the same platforms and integration global change which you just told us about.
So I think, to my mind, Raghu, the difference is the scale and size of our operation. We have been, as you know, the largest foreign bank in the country with significant market share. So I told you already about having a 30% market share in the multinational segment. I talked about having a 27% share in the custody business. We handle around 8% of India's trade volumes through our trade platform, exports and imports. We handle 5 to 6% of India's domestic online payments. If you look at it for, you could say for a foreign bank, I mean, it's kind of punching above our weight. So I think in terms of, I would say, if you look at the breadth of our banking platform, I still believe across our markets platform, our transaction services, which is cash management and trade finance, as well as our client segments, which goes from multinationals, large Indian companies, financial institutions, as well as our commercial bank, which looks at startups, digital names, as well as MSME, more middle and higher. I think we have, in size and scale, I would argue probably the broadest, deepest, biggest platform. And plus, the whole logic of that strategic shift, which I talked about, which was exit consumer banking in certain markets, is to double down our effort on our institutional businesses. So you'll actually see us investing even more. We've just added 100 bankers to our commercial banking business, where we have, high ambitions. We are investing, we are hiring 5,000 people every year for our, our global service centers, which serve Citi's operations globally in things like technology, analytics, risk, finance, operations. So India is a place where you're going to see a lot more investment coming from us and focus.
What you just said, to the extent that the retail liabilities is off the table, how do you fund your asset side now?
Yeah. So actually, we are very well funded because, for transaction services business, which is a cash management business, we are actually a very, very large player in that. And that is increasingly becoming a technology business where you need to embed yourself, both on the collections and payment side in the client systems, through LinkedIn APIs. And our institutional business is more than well funded from the institutional deposits which we get as a part of a cash management business, right? Which is sticky business, because it's not just, you're not just pricing who's going to get the highest return on the deposit. You're actually adding value to customers by giving them the best solutions for their cash management, working capital management, supply chain management. So that's not a concern at all, Raghu.
How do you view India and your businesses linked to it, like institutional and investment banking right now?
See, we are very optimistic because one, I think the India corporate sector today, and I would argue even the banking sector, is actually in a very good space. The amount of deleveraging, the capital injection, the balance sheets are healthier. I think we do expect that the private sector capital expenditure cycle is going to follow. I think we already see a number of our customers now, and you see it, right? And there are a number of fields, whether it's on the EV side, whether it's on new energy side, whether it's on some of the core infrastructure side. You've started seeing investments pick up from the domestic private sector names as well. I think we're also very excited about the whole digital tech startup universe in India, because that's a core competence for India, and that's coming along really well, I would say. And then, of course, you said India incorporated, and if I was to define it broadly, given what's happening with the geopolitics around the world, right? Apart from the absolute proposition and all the positives of India, I think from a relative sense, I would say India really is one of the beacons of stability, right? I mean, if you see China, very complicated right now, Europe getting very complicated because of the cost of energy, redeployment to some extent, the military spend, the reconstruction costs for Ukraine, a lot of other emerging markets also very volatile, whether you take Turkey or others. So I think India, I really think we have a great opportunity, and it's great because the government, I think, has been very seized of the opportunity, and I think they've been doing the reform over the last few years, plus all the focus they have. I think India is going to be a good hub for attracting foreign investment as well, the theme which I talked about earlier.
How does a legacy bank like yours deal with fintechs and their promoters because they have a different cultural background completely. In fact, they may be disrupting the very same businesses you're financing at some level. So how do you balance this out?
Yeah, so two things, Raghu. One is I think we don't necessarily see fintech as either or. We actually actively collaborate with fintech, and a number of our product services has elements where we use fintechs to collaborate. But the other point, fintechs as our client, but I would say even wider. I don't want to define it only for fintech. I want to define it for a broader tech universe. And tech has been a very broad-based disruption, right? It's not only in fintech. It is agri-tech, consumer tech, health tech, auto tech. It's happening everywhere. And I think we were, I would say, fairly early on in identifying this opportunity. So we have actually, through our commercial bank, been building relationships with a number of these companies, which are today household names, 7, 8, 9 years back, from their very infancy. And therefore, I think by the time they come to a stage when they're ready to go public, we already had a relationship for 5, 6 years, right? In terms of giving them funding, in terms of helping them with risk management. A number of them actually have global operations already, where again, it fits in very well with Citi's globality. And so I think having a dedicated unit which understands the specifics of these companies' needs because they're different has been actually a very good strategy for us.
Do you see banks like yours become incubators of new tech firms? 30 years ago, you incubated a company known as iFlex, which now resides within Oracle. Do you think that the time has come in again where you could be incubating your own technology or somebody else's technology and then scale it up like Visa was for Bank of America before it was spun off?
Yeah, so I think at a global level, because that strategy has to be driven globally, right? So we do have funds and dedicated, we look out for investments, right? Which could be viable investments for Citi, both from an equity perspective, and I think adjunccies, things which actually help our business for our clients in terms of product solutions, right? So that's something which is ongoing, Raghu. Whether it's going to be, I don't know whether the model will be, as you mentioned, the old, Sizzle or Puzzle or all the other operations we had, but we absolutely have a team globally which looks out for fintech and other tech investments, which makes sense for us.
It's been nice having you on our show.
No, thank you for having us, Raghu.
Citi is now looking at businesses which have synergy with global businesses. At one point, Citibank had one of the largest credit card networks in the country. This was also a time when a credit card application could take days, even months to process. Now you can open a bank account in a few minutes and get a credit card approval within seconds. HDFC Bank is going a step further and talking about a 30-minute car loan. Watch our next report to find out how that works.
It is a season of quick deliveries. No, we are not talking about Umran Malik, the sensational fast bowler from Srinagar who is making headlines in this year's Indian Premier League. It is about consumer-facing companies and their quest to reach their customers in a jiffy. From food delivery apps to commercial banks, everyone is joining the bandwagon. HDFC Bank, the country's largest private sector lender, has announced express car loans, which will be disbursed to the dealer's account in just 30 minutes. Typically, it takes anywhere between 48 and 72 hours for car buyers to get a loan. Quick delivery of loans is possible with the help of technology and the bank's wide distribution network, that is, its tie-ups with car dealer. According to Arvind Kapil, country head for retail assets at HDFC Bank, about 90% of new vehicle purchases are initiated online with less than 2% conversion at dealerships. Also, about 55% of car buyers prefer minimal physical processes. They are now demanding instant loans for car purchases, just like they secure credit for consumer durables, Kapil says. The bank says such an initiative is the first of its kind in the industry. It is a complete digital journey for a customer taking a car loan. The product is available to all existing HDFC Bank customers as well as non-account holders. According to HDFC Bank, these are not pre-approved loans and customers can avail of these as long as they meet the bank's credit standards. What are the interest rates? Well, HDFC Bank says they offer competitive interest rates and also adds, we have noticed that customers don't mind paying a small premium as long as they get good service. The typical repayment period for an auto loan is 5 to 7 years. The tenure for HDFC Bank Express loans is similar. The semiconductor shortage has led to a slowdown in car sales and increased waiting periods. The waiting period, for instance, of the new Maruti Suzuki Baleno is about 45 days, while that for Kia Carens, which emerged as a top-selling multi-purpose vehicle, is 6 months. In view of this situation, HDFC Bank has clarified that customers could avail of the loan only after choosing the model and ensuring that quick delivery is indeed possible.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
The express revolution is coming to other facets of banking as well. While neobanks have taken the world by storm, the central bank in India is using caution while proceeding in this area. It is also nudging legacy players to go digital. To understand the evolving digital landscape in the country, I had a quick chat with Joydeep Sengupta, senior partner at McKinsey and Company. Hi Joydeep, thanks for coming on the show.
Hi, Ishan. Thank you.
We just discussed the express loan system in one of our segments. There has been a flurry of digital products in the market, and earlier this year, there was an announcement for setting up 75 digital banking units or DBUs as well. Is this the pivotal year when we see most banks transition to a digital-first strategy? Also, should RBI enforce guidelines for a minimum number of DBUs each year like it did for bank branches?
No, thank you for the question, Ishan. I would say, though, that the acceleration in digital started during the COVID years. And I mean, I'm not suggesting that we're out of it, but we are certainly, I think in the last 2 years, we've seen dramatic acceleration. When we look at, however, this proposal to create these DBUs, I think they could certainly act as a catalyst. Right now, a lot needs to be done by existing commercial banks to think about what's the right model. In my mind, I think there are two approaches. I think there is one way to really think about taking these 75 DBUs and enabling adoption in the rural areas, in the semi-urban areas through partnerships with distribution partners like DCs, post offices, etc. And really using that as a way to accelerate digital adoption. So really adoption being the primary focus. The other is to use it as a common authentication layer, right? Which, like a UPI, for example, through which individual banks can essentially offer their digital services, whether it's on the account opening side or whether low-ticket lending, etc. Now, there is one option which I think is very interesting, which is to say that, look, is there an opportunity for the central bank governor to truly create a fully fledged digital bank only, with its 75 digital branches run centrally, using modern technological architecture and stack and so on? I don't think that's conceived at the moment, but I'd imagine that's an option which certainly exists as well. In terms of mandating, I'm not that a big fan of mandating branches, but I think most people will adopt this gladly.
One of the drawbacks of some of the public sector banks, as I understand, is the slow adoption of digital. What do you think the government needs to do there to bring them on a par with private sector?
I think it's worth stepping back and looking at what has happened to the market as a whole. And if I look, as McKinsey, we conduct a personal financial service survey every year. So between 2017 and 2021, what we've seen, if you call digital first customers, have gone up from less than 13% to over 30%. Multi-channel users have gone up from 60 to 73%. So if you look at some of these trends, and old-fashioned branch lovers have gone down from 15% to about 9%. Now, in that context, I think if you look at who has driven this change, and you look at public sector versus private sector, I'll take one example. If you look at an SBI, SBI's numbers are actually better than the market average in terms of digital acceleration. Mm-hmm. So I don't think it's useful to classify the public sector, private sector debate. On the other hand, I think there are a large number of public sector banks which aren't quite there. I think there are two issues which need to be addressed. I think the first is talent, right? Technical talent. You do need, I think, a very different cadre. And, it's not public sector banks per se are not attractive employment destination for the best technological talent that exists. So I think that issue needs to be addressed. The other is enabling faster partnerships, etc., with other tech companies so that they can rapidly overhaul their whole technology platforms. So I would say both talent as well as partnerships would be two areas which could be enabled for public sector banks to even move faster. One thing I will say that their physical network is actually a big advantage to digital adoption. So they could, if enabled, can actually do much better than the private sector banks.
Now, when we are talking about debates, one of the debates that comes about is the neobanks versus the traditional banks. Now, the payment bank system did not quite work well in India. What do you think were its failings? And is there any way to salvage that position now?
It's a great question. And, sometimes hindsight is always gives us lots of learnings. So if you recall, the payment bank approach was first envisaged in the early part of this decade, right? And only 2016, many of them came into being.
Mm-hmm.
And then since then, I think they were quite restricted in terms of what they could do. The active balance that you could have in deposits, payments at wafer-thin margins, and virtually no lending. And then you had UPI and other digital infrastructure come in, which I would say was not envisaged at that point in time. So that knocked the winds out of their sails at this point. Second, I think the existing banks really ramped up their own digital plays. So in a way, for a customer point of view, it wasn't obvious what the value proposition of the payment banks are. And in fact, I would argue that in today's construct, it's quite an unviable business proposition. At the same time, though, there are about 4 payment banks which intermediate a ton of payments, right, in the country.
Yes.
Maybe enabling them to do microcredit, broadening the scope of work that they could do, could allow, I think, for these to be equally successful over time.
Now, talking about failures, foreign banks haven't performed too well either. We just saw the Citi deal. Why do you think that is? And did they lose out on technology, or was it a losing out on culture part?
I would say that it's important when we talk of foreign banks to separate the businesses. So if you look at retail versus wholesale, right? And I would argue that in the wholesale banking space, foreign banks are doing exceedingly well in India. We come back to the retail space. I think if you look at criteria for success historically, it's been distribution presence.
Yes.
And foreign banks have been massively hampered because of regulatory restrictions on where they could expand and so on. And that gave the private sector banks and, of course, the public sector banks tremendous runway in terms of customer acquisitions. So it was very hard actually to come back from that position in terms of creating a truly profitable at scale retail franchise. I would say that is a primary reason. I think there is a secondary reason, which is around the structure of decision making on things like technology, etc. Typically, global banks tend to have one platform for all good reasons across the world. Local banks can be much more adaptive and create bespoke technology solutions for the Indian market. And I think that's the secondary reason I would also argue. Despite having, I would underscore, really terrific talent, I think the foreign banks have really struggled on the consumer side.
Now, linking back to the first question again, because we've been doing some linkages there, a large part of the population has been covered under the Jan Dhan Aadhaar Mobile Jam Trinity, and other benefits have also flowed too. But most of these have been account operations. Most of the accounts have been open. What do you think the government needs to do to bring more retail products to these people?
No, thank you again. And again, I'll do the interlinkages with your question in a second, right? So there are a number of these schemes which are on way insofar as meeting on the asset side need, right, of the mass of concern. I think what we need, though, still to really accelerate and make this happen are 3 things. I think one, we need real partnerships with distribution on the ground. So, we talked about the post offices, we talked about the front-end PCs, but that really needs to kick in. 2, that needs to get digitized, because that's going to, and the adoption of that. So if you recall, which is where I draw the linkage to the DBB, the first model of linkage could enable this certainly. And third is, frankly, the financing of this has to be ultimately viable, right, over a period of time. So collections, etc., need to be put in place. So those are some of the enablers, but I think it's been a very good set of moves already, which have been made a good starting point, I would say.
That's about it. Thank you. Thanks a lot for coming on the show. It was great talking to you, and we hope to have you back again soon.
Thank you. It was a pleasure talking to you.
Same here. Thank you. Banking in India has made strides with regard to digital adoption, but there's a lot more that the government needs to do as the digital landscape is changing fast. The Jan Dhan Aadhaar Mobile Trinity, JAM Trinity, led to opening of bank accounts, but now the government needs to integrate more services. That's all for this week. We'll be back next Thursday at 11 a.m. Do subscribe to our YouTube channel, and thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.